All right, everyone. Thank you so much for joining us today. We are going to be talking about AI-powered monitoring and the role in mobile grooming industry. So we're going to talk a little bit about risk reduction and how insurance companies are evaluating risks. And we're going to talk specifically about telemetrics, how they work. If you have a large fleet of vehicles, what you can do to implement telemetrics, how it can potentially reduce claims and severity of claims by monitoring driver safety. Before we get into that, we're really going to kind of start off very basic. First of all, my name is Chaz Grunder, and I'm one of the co-owners of Pet Business Insurance Agency, along with my brother Zach. And today we're going to tag team a little bit of this presentation. We're going to talk about risk reduction and kind of what we're seeing in the industry and how it can potentially impact your business and how tools are helping to reduce risks and severity and frequency of risk. So before we dive into AI monitored driving, we're going to really talk about insurance just to make sure that everybody understands what it is. So question one, what is insurance really? Insurance is a financial tool that spreads risk among many to protect in unexpected losses. So how does it work? Carriers collect premiums from many policyholders and pay claims for the few that experience the loss. If the claim outpaces the premium, the system breaks down, which is why profitability for insurance companies is essential. Insurance companies are not charities. They're financial institution, and they're responsible for managing risks. So why is this important to you? We're going to talk about first how insurance companies evaluate risk, and that might help us identify why it's important for you as a mobile groomer and why it's important for you that are at the US Pet Pro Classic taking these classes. First, insurance companies evaluate risks based on many different factors: location, vehicle value. Those are just the basics that they rate on your individual policy. But let's talk more broadly. How does the insurance company rate mobile dog groomers? So risk is evaluated using historical data. That data they measure is claims frequency and severity of the claims for across similar businesses. So class codes are used to group industry types. For example, in this situation, a mobile dog groomer has a specific class code that these insurance companies use to help identify the predictability of claims for that class code. As you expect, not all industries are created equal in risk. If you are a skydiver and you do that for a living, or that might be a little bit more risky than a accountant. And so insurance companies have created these class codes that are used to evaluate risks. And basically that's all based on historical data. So how does that impact you? If your class code, let's say the mobile grooming business class code, is experiencing higher than average losses, it's flagged for a higher risk. So what happens when a class like a mobile grooming becomes unprofitable? So let's say we have a class of 100,000 mobile groomers in the insurance industry. They are using the same class code and they are charging a specific rates. And all of a sudden there are a high frequency of claims and a high dollar amount of claims. How does that impact the insurance company? Well, if they pay out a bunch of claims and they're not collecting the revenue to offset those claims, they've got three ways to respond. Way number one, which many of you have probably been seeing the last year or two, is they raise rates to offset losses. That means the more people that are claiming small claims frequency and the larger claim payout amount will negatively impact the cost of the insurance across the entire industry. So the first thing is raise rates. Premium increase are not going to, and the insurance companies are not making money because we're paying out too much claims. Raise rates, cancel or non-renew policies, or exit the market completely. Once again, deeply concerning to see how this is impacting the market in today's world, with more and more insurance companies getting out of the mobile pet grooming space. It's becoming more and more concerning that we may have less and less options. So the question, why is this happening? Number one, claims frequency. So the more small and moderate claims that occur more often is going to impact the rate. So for example, you're paying, let's say $3,000 a year for a commercial auto policy. So that insurance company has given you basically a piece of paper that says they're willing to cover you for up to $1 million in general liability losses, and they're going to collect $3,000 from you this year. You have a window that needs to be replaced. You have a $500 deductible, a windshield that needs to be replaced. You have a $500 deductible. You say, you know what? I'm just going to put in a claim, and that way I get my $500 back. What happens to the insurance company is they pay out that claim. And that $3,000 that they would have potentially collected that would pay for some of those higher incidents that happen are now being used for a small windshield claim. And when so many claims are submitted, that is going to negatively impact the pool of money that they have available. Number 2, claim severity. When claims occur, they're more costly claims. So injuries, damage to mobile units, client disputes. Whenever there's an accident and you get an attorney involved, you can almost 10x the amount or the cost of the claim. So really the biggest concern that we have in the mobile pet industry, in the mobile grooming industry, is around the commercial auto policy. You guys are driving around heavy, large vans that are valued very high, and oftentimes you're going from place to place, trying to make your next appointment quickly. That is really the concern that we have, is what happens if you get in an accident. After a few years of bad data, right, where you have basically claims exceeding premiums, it is likely that an insurance company is going to drop a class completely. So insurance companies look at both to determine profitability. So claims frequency and claim severity to determine if they should continue to write a class of business. So the question is, what can we do as an industry to protect the industry? Number one thing is to encourage best practices and safety protocols, especially in mobile operations. So first, for your employees, for everybody in this industry, it's important to promote risk management education. For groomers, you guys need to drive safer. You need to be more reserved in safety. We've seen a ton of claims in the commercial auto, and they're not cheap claims. Think about how technology has changed in cars. You rear end a Tesla or a Rivian, right? Maybe 5 or 10 years ago, that would be a $2,000 bumper, right? You rear end a Tesla or Rivian, and you could be talking about a $30,000 fender bender. They have to go replace the fender. Maybe they need to go check the batteries, make sure the batteries are strapped back in. They need to go and check all the sensors for the self-driving technology, put in new sensors, and then recalibrate the entire system and reprogram the entire system. So the era of, hey, I'm putting a new bumper on and putting it back on is gone. So when you guys are driving and you're going from place to place, really get in that mindset of how can I drive more safely? And in addition to driving, really, what kind of other risk management tools can we put into place for groomers? So how do we educate the groomers about animal handling, about equipment protection, the equipment that they're using, the ergonomics, what it is that they're doing? And how do we develop industry-specific safety programs that shows these insurance carriers what we're doing and how serious we are about reducing losses? So the future of affordable insurance in this space depends on how the industry responds now. Once again, we're all in this together. The insurance company uses class codes to evaluate the riskiness of a business. And if this industry continues to have a lot of claims, it's just going to be more costly for all of us to do business. So going from that, explaining a little bit about insurance, how rates impact and everything, we're going to talk about one area that insurance companies have been using, which is telemetrics. And we're going to talk about how telemetrics works. If you're an independent groomer, it might not make a lot of sense, but for you that have multiple grooming vans, maybe some unexperienced or inexperienced driver, telemetrics should be something that you're considering. It helps you monitor driver safety. So we're going to dive right into that. How telemetrics works. Vehicles with telemetrics has a device. Sometimes they're like hardwired into the vehicle itself. A lot of companies are now doing it with cell phone. You can use your cell phone because your cell phone can kind of already know your rate and speed and some of the other things that are measured. But basically a control unit, telemetrics control unit, sends data to a cloud server, driving data. The users can access the real-time data that's stored via cloud or a web app or any other user interface. So the vehicles with telemetrics devices send data to cloud-based servers, and it gives us information into how risky of a driver or how risky your fleet of drivers that you have are by measuring a few factors. Number one, monitoring how fast are you going? How hard hard are you stopping? How quick are you accelerating? What is your speed? All these metrics can help insurance companies identify how risky of a driver you are. If you are hard braking all the time and telemetrics picks that up, you're probably a risky driver, and you're probably going to be way more prone to an accident where you're rear-ending somebody. You got these heavy vehicles, you're just following too close. Acceleration. You got these giant vans, they're heavy, and if you are trying to speed to get into traffic and trying to accelerate really, really fast, you're probably turning into a lane of traffic that you should be kind of more cautious about. And so that is acceleration. Sudden braking, same thing. If you're, flying to a red light and you stop real hard, or you're looking down at your phone, you're not paying attention, you're trying to see where your next appointment is, you're texting the customer while you're driving this $120,000 vehicle that you can potentially hit and kill somebody going through a crosswalk. This is how insurance companies evaluate those risks. And this is how telemetrics is used, and how AI can look at these data points and basically indicate your risk using all these different data points. How much more likely is this specific driver going to be to cause an accident and potentially cause the insurance company to pay out? So that's basically what telemetrics is in a nutshell. It identifies unsafe driving behavior, will alert the owner of the business of incidences that are happening so they can evaluate their individual driver. That's, if you guys have questions, why does it cost so much money to add one driver to a policy? Well, why does it cost so much money? I added Danny and it almost doubled my premium. Well, it's because Danny's information, his driver's license number, and his motor vehicle report is being pulled into your commercial auto policy. And if Danny has a DUI and a couple accidents, he's going to be more risky to insure than Sally. So when you guys are open and trying to hire groomers that you're adding to your policies, you should be checking and asking about their driving record before you hire them to help reduce your risk, because that's the last thing that you want. You want somebody that is representing your business that is an unsafe driver driving a $150,000 heavy vehicle. That's a risk that you don't want. They could potentially cost you your entire business. The next question I get is liability risks and the damage of low liability limits. So this is one of the issues that Zach and I see a lot. We will see a groomer send us over their insurance policy, and they have really low liability limits. So liability limits, let's say you have a $100,000 liability limit. That is the limit of the amount of money the insurance company is going to pay for your liability. So let's say you are driving through a crosswalk or a parking lot or backing in, and you accidentally hit somebody, a person, a pedestrian, and they end up being severely injured and end up in the hospital. They're there for 7 days. They were in the ICU. Maybe they had to be airlifted, and you are all excited that you have insurance and that you're covered. Well, the reality is you're only covered up to $100,000. I can tell you from experience, having to look at a family member's helicopter ride. The helicopter ride itself exceeded the $100,000 limit, and that had nothing to do with medical treatment. So low liability limits put you at risk. We don't recommend anything lower than $1 million liability limits. $1 million liability limits is what you should consider as a business owner as the lowest liability limits that you should have. So making sure you have the right liability limits is important to protect your business. Next, we're going to talk about best practices for reducing insurance costs. So in the last couple minutes, we talked about how frequency of claims and the severity of claims increase the rates, the insurance rates. So one of the best practices that we have seen is you should be establishing a slush fund for minor incidents rather than filing claims for small damages. So we talked about frequency of claims, and we gave the example of $1,000 windshield. Well, when you think about it, you say, oh yeah, the insurance company, I paid $500, they paid $500, so they're really only out $500. Well, that's not the case, right? It costs more than $500 to find the attorneys to write the policy. It costs more than $500 for that claims adjuster to manage that claim, to get the claim from the windshield repair shop, to process that claim, to process that check. So when you think, oh, it's just a small claim, it's not going to impact my rate. No, there's a lot of work that goes into processing a claim, and there's a lot of regulation that makes sure that the insurance industry is handling the claims correctly. So if you establish a slush fund of money that is put away for a rainy day, should your windshield break and you've got $5,000 in a slush fund, know that paying for that windshield and not reporting the windshield as a claim is going to help you reduce insurance costs in the long run, is going to help the industry out in the long run. So best practice that we've seen, sure, use your insurance if you have a large claim. That's what it's there for. If you have a costly claim that could negatively impact your business, you want the insurance company's lawyers on your side defending yourself from whatever happened. Use that slush fund for the small claims as they arise, and that'll reduce the frequency. With that being said, now that you have a slush fund of money to save on your cost of your policy, raise your deductibles. So if you raise your deductibles, let's say your deductibles are $500. So if you get in a collision, right, you have to pay the first $500, then the insurance company pays the rest of the collision. Well, if you raise your deductibles up, that's going to save you on your rate, and it's going to lower your premium and discourage you from filing small claims. So best practice for reducing insurance costs, create that slush fund, raise your deductibles so your premiums can be lower, and it'll discourage you or your business from filing small claims. Next, we're going to talk about how technology-driven solutions can help you manage risk. You guys know there's many software providers here. I think Mogo, I think there's a few other software providers are here, and they do a great job of route optimization software. So as you're going through a mobile groomer and you have multiple appointments that you're driving to, the software can optimize your route, right? The funny thing is, I was traveling a few years ago to Costa Rica, and I was asking one of the locals, like, hey, should I buy the GPS for the rental car, or what do I do? They said, oh, no, use Waze. And I'm like, okay. So the friend that I had told me, yeah, just watch out if you're driving on the side of the road and you see these bunch of like green banana leaves on the side of the road, because somebody could be broken down. The roads there are not that great. So sure enough, I'm coming around the corner and I just see a bunch of leaves on the ground. I'm like, what is this? Kind of spread out through the road. That was their cones. And the funny thing is, when I drove by, it was warning me of, something on the road. And so those are just examples of how you can use technology to kind of reduce your risk, right? You don't want to be sitting there staring at your phone, but your route optimization can help streamline your drive so that it's the shortest distance or the safest. So that's one way to reduce risk. And AI systems can detect risky driving behaviors and provide real-time alerts to drivers. So if you've got a fleet of 10 vehicles and you've got some younger drivers that you're concerned in, I would tell you right now as a business owner, that is one thing that would keep me up at night, is thinking, hey, 22-year-old driver driving my $150,000 van is replying to text on their cell phones and speeding 25 miles over the speed limit on the freeway. That's enough to keep you up at night. And that's the type of conversation you should have should you have the software. Hey, Chaz, yesterday I was evaluating your driver safety and I got an alert that you're going 25 miles an hour on I-5 over the speed limit. Like, why were you in such a rush? Do you know that that's putting me and my business at risk for your risky driving behavior? What do we need to do? How do we address this to prevent you from driving like this in the future? Because you're putting my business at risk. Those are the type of conversations and teaching moments that you should have with your employees, and you should hold yourself accountable. If you want to learn more about safety and claim prevention, kind of take a look at our website. Really, our goal this year is going to be to provide more educational content so that way we can help the industry. Nobody wants to see the industry have these huge rates and make operating a mobile pet grooming business unprofitable because the risks and things that are happening in the industry. So we have our commitment this year to put together more videos, more blogs that will kind of explain the risks, how you can protect yourself, and as a business owner, what to look for. So we got some blogs here, give you an example of, do I really need pet business? Texas dog bite law, what every pet business owner needs to know. All kind of specific articles to different areas, understanding workers' comp requirements for Texas pet businesses. So we've got a lot of blogs posted, a lot of useful information about ways to reduce risk and what to look for. Next thing is integrating safety practices, systems, and tools. So there's a few things. You should be implementing regular vehicle maintenance checks. I know you all here aren't mechanics, but you should have maintenance checks. you should have service logs, right? Nobody wants to be driving down the freeway. You haven't changed the oil for 40,000 miles and your Sprinter van blows up and you're on the side of the freeway. Now you have a semi that could rear end you because you're in a risky situation. No, implement regular vehicle maintenance checks. Check your brakes. Take your vehicle to regular maintenance. Make sure you get regular oil change. Check your tires. All that kind of stuff will help reduce risk. If you have some bald tires in it and you get into a rainy season and you go to make a stop with that huge vehicle, your stopping distance can be greatly increased. So implement regular vehicle maintenance checks. Use AI-driven dash cams. Now, this is kind of one of those things that the insurance industry is not completely bought into, is using dash cams to reduce the rates on insurance policies, because what they're finding out is a lot of times they get the video and it is the insurance owner themselves that was negligent. And so now you just have video proof that you were following too closely or that you were looking down at your cell phone when you got in your accident. And that really doesn't help them defend your liability. But what I would say is, if I was a business owner and had multiple vehicles on the road and I had employees that I'm trusting the livelihood of my business that are maybe younger and less experienced, I would have AI dash cam so I can monitor their behavior. Because if I've got an employee looking down, texting on his phone while he's driving through a elementary school crosswalk, they might not be an employee of mine for long. So if you do have larger fleet, that would be something that I would consider implementing, as long as you follow the process. It doesn't do any good if you just record video, right, and nothing's ever done. They have to be actionable insights. You have to take what you learn through observing the video and you have to teach and train better and hold your employees accountable, because just recording itself is not going to do anything. You really need to teach and train and show how to reduce risk through that. Next step for improving safety practices is establish clear safety protocols or loading and unloading pets. When you're picking up a pet from a client's house, are you properly securing that pet from the front door to your mobile grooming van? You don't have any ideas how many times we have seen a dog get loose on the way from the customer's door to the van, run across the street, get hit by a car. Or the dog gets loose and there's an elderly lady walking across the street that's in her 80s. Dog jumps onto that lady, knocks her over, and she breaks a hip, and you got $300,000 in medical bills. This kind of stuff happens. We see it all the time. These are the practices that you should implement. Also, evaluating the safety of the dog. I hate to give horror stories. Zach may have talked about this in his last session, but we had an insured that was evaluating a dog to see if this dog was safe enough to bring into their facility. And in the middle of the evaluation, the dog bit and took off most of her ear. This happened while she was working. And so as an owner, she had elected not to have workers' compensation coverage because I'm a business owner. I'm not going to sue myself. When she got injured on the job, she got bit by a dog. She went to the hospital. They took her regular medical insurance and said, where did this happen? How did this happen? And she explained that she was working and the dog bit her ear. And they said, well, you don't have workers' compensation insurance and this is not covered under your medical insurance because you were doing this in the course of your job. So typically what the health insurance company would do is if you got bit by a dog and it wasn't a dog that was in your control, your professional control, then they would go after the homeowner, whoever's dog that was. But since you had taken as a business control of the dog and the dog bit you, that's really your responsibility. So she was stuck with a $350,000 medical bill that wasn't covered because she didn't have workers' compensation insurance. So you always want to make sure that you're establishing clear safety protocols, unloading pets, bringing in pets, and making sure they're properly secured. All right. Thank you very much for tuning in. Have a great day. Bye.